Hi, this is Praveen Gautam, your trusted dental growth partner. Well, I'm here with my friend Albert. G'day, Albert.
Hi, how you doing?
Yeah, good, mate. Well, tax time, another time. So, what can we benefit in this time, mate? What is the takeaway here?
Well, certainly in June, you know it's coming up to tax time because on the news they'll have the audit hotspots, what the tax office is going to be looking at this year, which seems to be the same sort of stuff year after year. And how do I make sure that I reduce my tax exposure? Okay, first thing is you should be trying to reduce your tax throughout the year by cleverly looking at what you're spending on expenses, how you're managing your affairs and doing all of that. But coming up to 30th of June, superannuation is always the thing to look at. From a contracting dentist, from a practice owner's point of view, you've got a $30,000 limit that you can claim as a tax deduction. My view is really important to try and maximise that each and every year, particularly if you're on a high income, because it's tax deductible. The other bit is that if in the past you haven't put the full $30,000 in, you can do what's known as catch-up superannuation and catch up on the shortfalls in the previous years. This is particularly important if, let's say during the year you sold one of your investment properties.
Yes.
And so not only have you got your income for the year, but you've got a capital gain that you're going to have to pay capital gains tax on. Now potentially you could have $100,000 of catch-up super that you might need that you haven't put in for the last few years. Put that into the super fund, get a tax deduction that's going to offset a lot of that capital gains tax that you've got. So it's really just planning with it. Just remember that if you already have a superannuation balance of over $500,000, you can't do any of that catch-up stuff. So it's only for people that are sort of beginning on their road to super.
Yeah, thank you, Albert. So, dentist here watching might be, oh, this is too boring. I mean, super, a lot of things every time you hit on the radio, TV, everything, it all comes with, shiny object syndrome, EOFY, this offer, this offer, this offer. So, practice owner, can they get into EOFY and maximize that benefit, like all the vehicles, these things, can they claim everything?
So, like I said originally, a lot of those things should be done during the course of the year. If you're going to do anything that's a major purchase, like a motor vehicle, or as we spoke about earlier, electrical vehicles that are not subject to fringe benefits tax, always just consult with your accountant first, because it's not just the buying of that. So you certainly want to make sure the vehicle that you're buying is able to take advantage of those exemptions. So check that out beforehand, otherwise you're going to feel very sorry for yourself. But how do you finance it? Do you look at a novated lease? What are you getting as a good deal and all of that type of thing? Other thing as a practice owner, usually you've got specials on from your suppliers.
Yes.
Stock up on those things that aren't going to expire, that you can get a tax deduction for now and get at a discount. So financially it's better off because you're buying in bulk, you're getting an end of year discount because they're trying to boost their sales before the 30th of June. $20,000 asset write-off is still on for this year. So if there was autoclave or something else that needs to be purchased, absolutely buy it now, instant asset write-off. Just remember, it's $20,000 per asset. So you can buy a couple of assets, maybe $100,000 worth of smaller items if you're doing that, and get the tax deduction for it in this year. Can also look, and we're going to go back to super, and I know we've had enough of it, but if you're an employer, you've got to pay your super for your employees every 3 months.
Yep.
Super is not tax deductible until you actually pay it. Your June quarter that's coming up now for your staff doesn't need to be paid until the 28th of July. If you pay it on the 28th of July, you get the tax deduction next year. But you could always pay April and June month,
Right.
April and May in June.
Okay.
I've got some that are looking at, we know exactly how much we're going to pay. Just before we get to the 30th of June, we'll pay up all that quarter. We're going to have to pay it anyway.
Yeah.
Pay it, and we've got the tax deduction for this year. So they're just some of those things. Again, talk to your accountant before you're doing it, but just stay aware. Don't leave your super till the last minute, because it needs to clear your superannuation fund before the 30th of June so that you've got that tax deduction.
Yep.
So 29th of June ain't gonna do it.
Yep.
You really wanna be a week, maybe even 2 weeks before. So get your skates on, get your contributions and deductions in.
Thank you, Albert. Just last before we go, I also often get asked by a lot of practice owners, Prabin, can I pay now? And of course, you will do the branding for the new website or the marketing services. What's your thought on that?
Yeah, absolutely.
Okay.
You can do prepayments is a very good way for businesses,
Yep.
from a business point of view, to get a tax advantage. You can prepay rent, you can prepay your lease payments, prepay your marketing expenses. All of those things, again, not a bad idea to talk to your accountant. Generally, there's a limit on no more than 11 months into the future.
Oh, okay.
So just 1 year's worth, can't pay the next 3 years worth of your marketing plan.
Okay.
But 1 year into the future, legitimate prepayment of an expense, provided they're holding an invoice, it's a legitimate deduction at that time.
But in terms of the branding, like new website, photos, videos, all the branding collaterals can be right up, right?
Now, branding certainly will be. If it's website building and development, then often that may be considered a capital cost that might need to be amortised over a period of time.
Okay.
Again, depending on what's stated in the invoice and what you're actually doing, you know, is it an upgrade to the existing website or is it a brand new website from scratch, will make that difference as to whether it's deductible up front or whether it needs to be amortised over a period of time. But certainly one of those things to look at, pay for that. Same sort of thing for your friendly accountant. You're going to have your tax return done anyway. You can prepay for your taxation, financial advice, anything else before the 30th of June, and it's tax deductible.
Beautiful. Thank you so much, Albert. I hope that's been a value to you. So let's maximize the time. And if you got any questions, please reach out to us. All the details are right below. Thanks for watching. See you in the next one.